Oh man, this is an emergency video because CPI inflation has just rattled this market. Bitcoin breaking down from an important pattern as we speak. Inflation returns, and what does this mean for our rate cuts expected this year? All up in air. Bitcoin was sitting pretty at 50,000. Could we now be heading further down to retreat at some support levels? I'm going to break down exactly what I'm seeing in the charts, what just happened with inflation, and a lot more. If you like these types of updates as and when they're happening, smash up the likes. Do not forget to subscribe. As always, check out the links in the description where I'm actively trading the market. Just hit an awesome trade on SNX, which hit our first take profit, and there's many more altcoin setups I'm sharing in the Telegram. As you can see here, Bitcoin breaking down from an ascending triangle here, which was consolidating. It was a bullish pattern, but I did alert this earlier in the day saying, guys, this can break in either direction. Be very wary. I also shared on Twitter, make sure you're following me on Twitter, that this was an important pattern, could break in either direction, okay? And you can see here, I did post earlier before that we are facing resistance at 50,000. Do not expect this 50,000 to be an easy level, but it's the inflation figures which has spooked the markets as we speak right now. Headline inflation year over year was expected to come in at 2.9% inflation. Now, why is that important? Remember, Jerome Powell always talks about the 2% inflation target, but he's also said in interviews recently, it doesn't need to be exactly 2%. It just needs to be heading in that direction. Now, we were going to get our first reading with a 2 handle on it. 2.9 is what the market was expecting, but no, it came in at 3.1%, which was the same reading we had in November. Very worrying sign here that inflation is returning. If you look at the month-over-month figure, this is your month-over-month figure, you can see this has come in at 0.3% month-over-month versus the 0.2% that the market was expecting. Now, why is this a worry? Think about it, guys. 0.2%, which is what the market was expecting, if you annualize that, is a run rate of inflation of 2.4%, which would be a good rate, right? 2.4% when Jerome Powell wants 2%. Hold up. Do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit, so you could learn to become a profitable trader. Check it out. Link is in the description. That would be a really good price target. But it came in at 0.3. 0.3 annualized is 3.6% annualized inflation, which is not good enough. It's not a reason for Jerome Powell to cut interest rates. In fact, it's a reason for him to stay higher for longer. And this is a worrying sign that inflation is rearing its head again. We saw the GDP figures, we saw company earnings coming in really hot, and this is backing up that data that inflation is still rampant. It's still a bit of a problem. We're not quite there yet. Look at this. This 0.3% reading is the highest one we've seen since October. Well, actually before that, right? September of last year when we came in at 0.4. So this is not a fun figure at all. Let's look at the core inflation, right? Because you got your headline inflation. Let's also look at the core inflation. Let's strip out food and energy prices. Well, when you do that, you'll see that the market was expecting 3.7. Again, it came in at 3.9. So it showed no reduction from the previous month, which again, the market was not expecting. So core inflation is stubbornly high as well. If you take a look at the consensus for the month-over-month core inflation, the market was expecting 0.3%. That came in at 0.4%. So the market was expecting 3.6% annualized inflation. It came in at a horrible 4.8% annualized core inflation. These are not low figures, and that 0.4 reading is the highest reading we have seen since April of 2023. And again, this is core inflation. This is a little bit of a worry, guys. This is a little bit of worry for the markets, and there's a certain reason here why the market is spooked. Bitcoin here falling down. Remember, when you fall from this type of pattern, if you've taken my TA course, ijazcrypto.com/TA, you'll know you'll fall to the bottom of the wedge, right? You come to this level of support, which is exactly where we're at, the 49.5k level. If we cannot hold this, next support comes down to 48.8. So get ready here on the 5-minute chart. for some more pullbacks. If we zoom out a little bit and not panic too much on the 5-hourly chart, let's bring out the EMA ribbon here on Bitcoin to see where does support start to come in for us. Can we start to get some support coming in? We know 48.8 is an important level. That also helps you retouch some of these levels, which is very good, but you're seeing we've got the EMA ribbon here as support. So it's important that Bitcoin can hold this EMA ribbon and not fall below it. Ideally, what you want to see here from Bitcoin is it comes in, it manages to bounce and then break through 50. But this news isn't good. This is fundamentally risk-off news, and you're seeing that in this God candle here. This is not a good candle here for risk-on, for Bitcoin, for altcoins, for the Nasdaq. This candle is no bueno. This is not good. We do not want to see the dollar index rising to the upside. Now, why is it rising? Well, guess what? As I shared in the lead up to the CPI reading, if inflation came in horrible, everybody is going to rotate risk off, and that is what we're seeing. When they rotate risk off, what do? They go into the US dollar, they flock to US government bonds, they flock to the safety of the US dollar because they don't want to be in Bitcoin, they don't want to be in crypto. And that is why we're starting to see a little bit of a pullback here, bouncing from its 4-hourly EMA ribbon and also getting a higher high. So this is a little bit of a worry here on this dollar index, right? If you look at what the dollar index is doing, it's managing to keep itself a higher trend. It's flipped its daily EMA ribbon and it's looking bullish. And whenever dollar index is bullish, it's very hard for crypto to do its thing. So my mindset here right now is we've had a nice bit of flurry up towards 50,000. Market is really euphoric. Market is really excited. Now I need to be looking for pullbacks. I want to see a little bit of that fear come back into the market based on some of these inflation figures. And if we do start to come back down, if we do come down to the daily EMA ribbon, if we do come down to 45.7 or even a little bit lower down to that 45K flat level, I would love to DCA at some of those levels, right? You guys know I don't want to be buying extended. I don't want to be chasing these green candles all the way up here into 50,000. That's not me. I want to buy when the markets are fearful. And maybe this CPI inflation figure is going to worry markets. And if that does worry markets and we get those pullbacks down to those cheaper prices, that is personally when I want to be topping up. Now, it's important to understand the next FOMC meeting is on March the 20th. The market is not pricing in that we're going to get a rate cut, right? And Jerome Powell pretty much said as much, right? He doesn't see how we're going to get a rate cut at the March meeting. 85% of the market expects the same, that we're not going to get a rate cut. Now, to be honest, with this news, which has just come out, don't be surprised to see this go up to 90%, 92, 93%, okay? Because more and more, there's very little chance that we're getting a rate cut as soon as March 20th with this kind of a data coming out in terms of inflation. The GDP's high, inflation is hot, this market is hot and does not warrant Jerome Powell having to do a rate cut right now. He doesn't have the basis to do a rate cut right now. So we are seeing Bitcoin fall a little bit here today, down 0.8%, but the real question is going to be, as the markets digest this inflation news, will we see deeper pullbacks? Will we come down into that 45 level, which again is personally where I want to be buying? Please do watch out for the short-term pattern I did just share with you. Of course, this ascending triangle is breaking to the downside like I shared with you, but support in the short term can come from where we're at now, right? That 49.5K level. If Bitcoin's going to hold on, it's going to need to hold on here and bounce and work its way back up to 50. If it doesn't, next 5-minute support here sits at 48.8, which is what I'm looking for here. If we zoom out to the hourly, you can see that a little bit more clearly. If this wants to come down, you got 48.8, and then really you got this cluster of activity which kind of characterized itself between that 48,000 mark. So again, support will start to come in around that 48,000 mark as well. So horrible inflation news coming in here on a Tuesday midday here in the UK. Look, it's panicked markets, right? But panic is exactly what I want. This market has been so euphoric over the last couple of days, so much FOMO and greed coming into the market. It's good to flush out some of that leverage. It's good to flush out some of those overexcited crypto people. Oh look, crypto's pumping, let me buy here at 50,000. Guys, you know, I don't chase green candles. I've been in this market way too long to be doing that. I was buying at 15,500. I certainly do not need to be buying at 50,000. If we get pullbacks into the daily EMA ribbon, if we get pullbacks into that nice kind of 45, 46K level, then I'll be looking to use my cash on the sidelines to add some more positions on Bitcoin and some of my favorite altcoins. But I'm certainly not chasing it just yet. Thanks for watching, guys. If you appreciate these live and direct updates as and when the inflation data comes out, smash up the likes. Do not forget to subscribe, and I'll see you in the next one.